Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
Sunday the 1st of September and we're back fresh from a great summer. How are we all feeling?
Well, you might have had a break. I've been working flat out for August. Kev sat on the beach. Phil's taking the holidays.
I was just going to say, you've been very conspicuous by your absence.
And I've spoken to you on at least 3 occasions, Charles, to take some time off and relax.
Yeah.
You've ignored me. You've ignored me every single time. So
you've been very conspicuous by your absence. You've had 6 weeks off. You've done no work. You've had lots of downtime. I've had radio silence, and I've not seen any posting on any Telegram groups or X. What's happened?
Oh my God, I don't know. Do you know? I think it's a disease almost is what it is. But it's the problem. I think the Telegram group in particular is the issue because you have to stop moderating that. I was ill for 1 week, right? And this was November last year. And I came back and you had 1,000 people sort of throwing insults. If they'd been there in real life, there'd be pig heads on sticks, right? And just everybody dancing around a fire. So no, it never sleeps, and neither do I. Until I'm wealthy enough to give up in a few years' time.
You can't.
1984 is becoming real, I think.
Oh yeah, well, I think it's kind of Telegram groups are becoming kind of like real life almost. I mean, look what's going on in the UK. It's people getting thrown in prison for social media posts is just madness.
Yeah, there was a lot to talk about, obviously, in the last 6 weeks. So, obviously, first time back since Labour's landslide election victory. I mean, what do you make of the whole summer of discontent with the parties faced significant criticism and declining support? Obviously, the platform of change. We've seen, obviously, the fuel payments removed from pensioners, or most pensioners moved, that has sparked internal backlash and obviously public outrage. Petition now has been signed by nearly 500,000 people. How do you feel things are going? Especially, and obviously, it's also angered the environmentalists with their sort of publicly distance themselves from the fact that they want to control, help influence the water company to stop polluting the waterway. So, what do you feel is the opinion now of the Labour Party?
Well, the opinion, they've had no honeymoon period. I mean, generally governments get a few months of grace, and now Keir Starmer's personal approval rating is just through the floor. The biggest thing to me, economically, seems to be that every headline, every idea that we have is how we can extract more and more tax out of stagnant wages or potentially out of, wealthier people, rather than how we can achieve wage growth to boost tax revenues. And you see this everywhere, it's what we'll do, the idea is, at the moment we're going to increase capital gains to be at parity with income tax. Seems to be the idea that's being floated around. Or we'll increase inheritance tax. As a small business owner, I've seen the dividend allowance, shrink from $5,000 to $1,000 over the past few years. I've seen dividend tax increased, capital gains, if that's going up, but the capital gains allowance has gone down from $12,300 to $3,000. Business asset disposal relief has, dropped from 10 million to 1 million. Corporation tax went up from 19 to 25%. A lot of the expenses that I used to put on my books, I can't put on anymore because everything's been tightened up. Yeah. And so you're sitting there sort of thinking, well, this government's come in promising growth, and yet I haven't seen any growth ideas beyond borrowing billions of pounds to start up a few kind of state-funded enterprises. To me, it's we're going to tax you more and more. And it's got to the point now where a lot of people in my network are thinking, what's the point? Or alternatively, we'll move abroad.
Yeah.
And, that is what it is. What do you think, Phil?
Yeah, I mean, I saw UBS Global Wealth reports that 500,000 would potentially leave between now and 2028 based on tax increases, obviously, particularly entrepreneurs who may relocate to sort of more favourable tax regimes. Whether that number will actually, hit the 500,000 is a lot of people talk the talk but never walk the walk. I think, as you say, the pensioner one is an absolute, it's terrible news. There's a lot of people, especially those who really cannot afford it, who are going to be, we saw that in October there's going to be, is it a 10% increase on energy bills?
Yes, when before the election they were saying it would drop £400.
100%, exactly. So, yeah. So all right, did you see that? I mean, who faces the daunting task of having to answer 243 questions this autumn?
I don't know. I mean, I look at the...
I'll tell you who. Pensioners in the UK.
Yeah,
fill out 243 questions.
They're not going to be able to, are they?
Who's going to be able to do that?
I think, but then that's the benefit system in the UK, just in general. It's so complex. It's so difficult. that we've created a situation where it's almost impossible to claim them, and if you do claim them, it's impossible to create an incentive to work. And like one of the examples that I like to give, because we're all quite high earners, I would say. Well, we are. This objectively we are. But when you look at people, if you've got a single parent with 2 children, if they go out to work and earn an extra sort of £1,000 a year or an extra £100 a week or whatever, between the universal credit withdrawal taper rate, the withdrawal of council tax support, the cost of providing childcare, often it costs them money to go do extra work. And then at the top end, if you're earning sort of over 100 grand a year, you lose childcare, you lose child benefit. Between 100 and 125 grand, you can actually have a tax rate of over 100% if you've got 3 children, which I do. So we have these kind of mad incentives in the tax system to not work. The VAT is another one. I think the level is set at 85 or 90 grand now. Plenty of people don't earn more than that in order to avoid registering for VAT. Because, when I went over the VAT threshold, I lost 2 or 3 smaller clients who just couldn't justify the extra 20% expense. This happens to everybody. But yeah.
So one for Kev then. Which sibling rivalry has ended this week, Kev?
No idea, but what I will say about the fuel allowance, I'll come back to your question in a minute because I've no idea what the answer is that anybody who's on benefits is still going to get this winter fuel allowance. And in reality, that's the way it should have always been. I'm sorry for saying it, but most of the pensioners in the UK have sufficient money and they don't normally spend all the money they have. Not all of them.
I wouldn't agree with that. I'd say a high percentage are living on state pension, which is nowhere near covering the costs of even living costs these days. I would say a lot of them are on what's the minimum pension, Charles, these days?
Like
state
11,000 a year, 12,000, something like that. Yeah. I think the problem is that you can split pensioners into 2 groups. There's the ones who have bought and paid off a house, right? In which case, if you've got a married couple earning 24 grand a year from the state pension, 2 grand a month, if you have no housing costs, it's perfectly viable to have a comfortable retirement. But if you are still paying rent because you haven't bought a house, and that's, just I think it's just under half of pensioners in the UK. We've seen what's happened to rent over the past 2 years. Even if you're renting a 1-bedroom flat, that's £1,000, a month gone if you're living in the south of England. It's potentially not viable, but I don't know. I think the problem is, as always, that the system is so complex, and it seems to me that there is such a thing as pension credit. Potentially just getting rid of the winter fuel allowance and just allowing people to apply for it if they need it might make more sense, but I don't know.
Who the sibling rivalry is no longer?
Yeah.
And no idea.
Charles?
Well, I think I don't know. I this sibling rivalry.
This is William and Harry. This is a tough question.
I thought it would live forever. But I think we need to stop crying our hearts out.
Well, I mean, after all the anger, some might say the brothers are finally ready to roll with it and put their champagne.
Now I understand. The penny has just dropped. The water has arrived in the oasis.
Oh, very good. Very good.
So, I mean, what do you make of that news? That's dominated the headlines.
It's great. Like, it's absolutely great.
I look out and there's a lot of sunshine.
I'll tell you what's happened, right? Those 2 brothers, right? They've seen Taylor Swift prance around the UK. Headlines going, Taylor Swift, is
made $1 billion.
The global economy. Interest rates might not fall because she's done so much growth, and they've gone, right, watch this.
Well, it's like Peter Kay when he did his My Mum Wants a Bungalow tour. Well, Noel Gallagher should have a T-shirt saying, I've just got a divorce, because he's divorced, and he's like, everyone's saying that she's taking him for all his money, and he's like, he suddenly needs to go on a UK tour.
Yeah, well, there was a thing that I saw on one of the reels or clips that was, and this was a few years ago, he said, okay, if someone offers me 100 million for it, I'll do it now, okay? Sign me up now. And I reckon they're going to make well in excess of
200 each.
Yeah. The problem is, I mean, like I don't have time, but like I would book one of the early shows because they're quite, they might need money, but they potentially don't have the best personal relationship. So it might be that you get 1 or 2 shows out of them before the whole thing implodes again. And if you're
cancelled after the first gig, as he throws another.
I'm sure there's quite a few contract scenarios that they don't get any of the money if they don't complete the tour. And all
you missed the
sort of
damn chord, you bastard smack, and then that's it. See you in 20 years.
Wonderwall. Yeah. No, I would like to go and see them, to be honest, and I think many people would as well. So it's
Yeah, for all those who managed to get on
Vikings.
Saturday morning and get the tickets, well done to you all, and I'm sure it'll be a good gig. Although I've seen Liam a couple of times live, and I've not been absolutely blown away by his vocals. Let's just say that. But let's hope that the two of them together with the harmonies can bang out some belters.
I don't think it's about how good they sing, though, is it? Some of the songs are extremely good, well written. Yeah, they think a lot of themselves, and that sort of transmits to the audience, doesn't it?
Yeah,
it's all a show, and that's what it should be, I suppose.
Absolutely. Shall we move on to our special guest this week?
Yep.
We're thrilled to introduce Rick Rule, a renowned investor, financial commentator, and founder and CEO of Rule Investment Media, widely recognized for his expertise in mining, energy, water utilities, forest products, and agriculture sectors. Rick's career has been marked by his unique approach to merchant banking in the resource sector, where he focuses on providing capital, strategic direction, and transaction management for undervalued companies. Rick is not only known for his deep understanding of market cycles, but also for his distinctive investment model that involves direct investment in natural resource projects, often providing both capital and expertise to help companies move from exploration to production stages. His method emphasizes close collaboration with company management to ensure successful project execution and risk management. Apart from his professional pursuits, Rick is a respected speaker at industry conferences, namely his symposium, where he shares his insights on resource investing, economic trends, and personal finance. His commentary is valued for its depth and practicality, offering investors at all levels strategies to enhance their understanding and performance in the resource segment. As the founder of Global Resource Investments and Sprott Asset Management, Rick has built a reputation for his prudent investment strategies and has become a trusted figure for investors seeking guidance on navigating the complexities of the resource markets. His perspectives are informed by decades of hand-on experience and profound understanding of both the technical and financial aspects of resource investment. Let's delve into Rick's philosophy and explore how he shaped the landscape of resource investing. Welcome to the podcast, Rick.
Thank you for that very kind introduction. Thank you for having me on your show as well.
Absolutely, yeah. So just talk.
I hope you can live up to that, Rick, because that was quite.
That was quite. The Game of Thrones lady, or it's one.
No pressure, Rick.
Of the Great Glass Sea.
Yeah.
I couldn't even have written that introduction. So thank you.
No problem. So, I mean, just talk us through your background. I mean, obviously, that you're a big name in the investing space. Talk us through the path from what I can gather from doing a bit of research, from the Vancouver bar owner to international speculator and investor. What first got you into finance and the investing space?
I'm not sure, to be honest with you. As a young man, I was very interested in biology and very interested in geology. The consequence of that is that I left the United States, emigrated to Canada. There were extenuating factors, of course, Vietnam. And I went to the University of British Columbia, and I had to have a job at night. The only transferable skill I had was that I was large. And I boxed for 10 years, so I became a bouncer. One thing led to another. I went from being a bouncer to a bar owner. And my bar was the epicenter to the sort of nascent Vancouver Stock Exchange. This happened while I was simultaneously in university. And I found that I was learning more about the type of finance and investing that I was interested in the bar, getting the Vancouver Stock Exchange players, frankly, very drunk, and asking them questions when I was sober and they weren't. I was learning more doing that than I was listening to my professors who had no money drone on about subjects that they only knew intellectually. As soon as my success in the hospitality industry allowed me to build enough capital that I could leave it and employ it in natural resources, I did so. The hospitality business was a transition for me. It was a way to get through school and a way to get started in business. So I've been principally employed in natural resource finance, and then later in my career, also in conventional financial services, insurance businesses, banking businesses. I've been continuously employed in this business now for 50 of my 71 years on Earth. Initially, my interest was in oil and gas. I am still extremely interested in oil and gas, but I found, frankly, that in the oil and gas business, I had a lot of intellectual competition. There were a lot of really, really, really good people, hardworking people in oil and gas finance. And I found in the early stages of mining finance that the challenge wasn't getting over the bar, it was getting under the bar. That the level of competition that I faced in that business was so low that although the oil business is a better business than the mining business, I could do better concentrating on mining. As my career advanced and I became successful and built capital, one of the things I chose to do to get my capital out of immediate harm's way was to invest in farmland and timberland, and hence that interest. I guess an unflattering thing is that I sort of jumped, luckily, from one mistake to the next and managed over time to have a wonderful life doing business with spectacular people on behalf of spectacular customers. And I learned to take advantage of volatility, and I've learned to take advantage of the cyclicality in resource businesses. When they are out of favor, you have to really, really, really storm in. And when they return to favor, when they become popular, you have to fairly aggressively ease out. Most people employ the exact opposite strategy.
They really do.
They sell in disgust at market bottoms, and they buy with alacrity at market tops, and that ends up not working out well for them.
Yeah, I think you've alluded to it in the past. Is it that you call it the contrarian investing model, and you actually, I think I've heard you mention that you invest in some ways in stocks that have been negatively talked about. Just talk us through some of those investments, or what sectors you potentially invest in. And I know we've heard Buffett say that if he doesn't understand the stock, then he simply will not invest in it, which sounds pretty reasonable. But people will, maybe look at the balance sheets. But in junior exploration space or project incubators, there generally isn't a balance sheet because they're just burning through cash. So what do you look for? What are some of the green flags and red flags in your investment strategy?
Let's segregate first between investing, which doesn't include junior miners, and speculating, which does. I do both. I suggest that speculation is the application of capital against the possibility, not probability, the possibility of very, very, very large returns. Investing is different. It's the application of capital with the probability of reasonable returns relative to the risks. And I do both, and I employ different strategies. My investing strategies are almost completely contrarian. The bargains for the application with the expectation of above-average returns only happens in commodities when they're out of favor. Let me give you a wonderful example. In, I guess it was the year 2020, COVID hit. And so demand for oil as a transportation fuel fell like a boulder off a bridge. The oil quote fell, if my memory serves me correctly, from $80 a barrel to briefly sub-zero before settling out at about $20 a barrel. I knew from statistics from the International Energy Agency that the fully loaded cost of producing oil worldwide, including tax and cost of capital, was $60 a barrel. So it was very obvious to me that either the oil price would go up to $60 a barrel or nobody's car would start. Those were the two alternatives. And I had to think which was more likely. At the same time, the finest oil company on the planet, Exxon, best capital allocator in the world, in the oil business, got thrown out of the Dow Jones 30. So all of the index buyers that owned it had to sell it. This is a non-repeatable sell signal. It just doesn't get better than that. The dominant player in a business where the price has to triple, that has a one-off event that causes 15% of the float to get sold.
It's crazy stuff, isn't it?
That's
whole.
So basically what you're saying is you went long at about minus $3.
I wish. I wish. The truth is that I waited 3 weeks too long. I thought, it can still get cheaper. And then I actually read a Buffett quote where he said, sometimes things are cheap enough. And that inured to my benefit. The other wonderful thing, actually, it wasn't Buffett that said this, but my former mentor and partner, Eric Sprott, said, don't be afraid to be right. If all of the factors associated with an investment are on your side, or if the upside is very quantifiable relative to the downside, don't limit your risk. Really, really, really go in. And I'm delighted to say with Exxon, after my 3 weeks of procrastination and stupidity, I put a lot of chips on the table. And if you'll see the Exxon chart in the period 2020 to today, you'll see that worked out well for me. Speculation is very different. Speculation, to me, is about answering a series of unanswered questions, primarily, in exploration. Speculation, too, is about overemphasizing people relative to narrative. There's a dictum that you're probably familiar with called Pareto's Law. That's the social science description of what's popularly referred to as the 80-20 syndrome, where 20% of the population does 80% of the work. In speculation, it's important to know the entirety of Pareto's Law. It's a bell-shaped curve, so 20% of the population generates 80% of the utility. A different 20% generates 80% of the aggravation. So your first task is to hang out with the good 20 and avoid the bad 20, with a barge pole. But it becomes more interesting as a speculator when you understand that in large tasks with large population bases, both the good lip and the bad lip, if run through the same performance dispersal curve, conformably align, which means that 80% of the 80% is achieved by 20% of the 20%, or 4% of the population generates 65% of the utility. And you learn in junior mining that you can run that same performance dispersal curve by at least one more standard deviation, which means that 0.8% of the promoters generate 40% of the utility. The most important part of my speculative career was learning by age 35 to hang out with the 1%. Now, because of boredom or greed, I've often gotten away from the 1%, which is really profoundly stupid. The rewards that I've enjoyed relative to the pain I've suffered, stepping out of my 1% ghetto, has meant that every time I've done it, on balance, it's been stupid. The second thing that I think speculators need to understand is speculation is taking risk with the probability of failure, but the possibility of outsized success. If you don't have the psychological strength and the financial strength to weather a series of 25 or 30% losses, you don't belong as a speculator, because the arithmetic is that your 1,000% gains have to amortize your 20 or 25% losses. And if you don't have the financial wherewithal and the psychological wherewithal to stand many more losses than wins, you shouldn't be a speculator. And further, any individual speculation that you get into has to have a large enough reward that you can't take the risk inherent in speculation for marginal wins, even though they're psychologically gratifying. The people who I see who are traders who are trying to buy a 25-cent stock in hopes of selling it for 35 cents, to me are analogous to people bending over to pick up nickels in front of steamrollers. If the probability is failure, the reward for success needs to compensate you for the probability of failure. I hope that long-winded narrative helps, because you asked a question that I think is extremely useful to audiences who haven't had to have been as focused on the outcomes as I have.
You're preaching to the choir here, I think, definitely to me. Literally, from the very start, with sort of university professors only have the academic credentials but no money in the bank to back them up, all the way up to the reward has to be worth the risk. I mean, I see so many companies where the exploration risk means that, ultimately, you're quite likely to fail. You may be a 20% chance of success if you're lucky, and therefore you've got to have a 5 times reward at the end of that, at least. And if you don't, there's hundreds of other companies to choose from. I mean,
or the other thing, Warren Buffett described investing as a game of baseball with no called strikes. Yeah. There's no harm in doing nothing.
Yeah.
You just wait for the pitcher to throw up a real fat, slow pitch.
Yeah. 100% true. I think, I probably have more cash in my portfolio than I have done in the past couple of years. Because my perspective is that we're due a big crash. Whether that happens or not, I don't know. But sort of sometimes I look at, it's like an opportunity will come across, and I'll look at it and go, this actually isn't that good. I'd much rather just have the cash and the 5% return until something better comes along.
That's great discipline.
And okay, here's a question. I mean, when you step out of your kind of, like you're saying, the top 1%, if you step out, you tend to get punished for it. Is there ever been a company where you've invested, maybe broken your own rules, but it's returned for you? It's done well for you anyway.
Often. My favorite example, the most dramatic example, was in 1998. I was absolutely convinced that uranium was going to go crazy.
Right.
The stuff was selling for $8 a pound. It cost the industry $30 a pound to make it. We'd been in a 20-year bear market. It wasn't just that investors were bored of uranium. When I talk about uranium from a dais in a conference facility, people were hostile. They'd say, you're attempting to make money on human misery. Chernobyl, Nagasaki, 3 Mile Island. But boredom is attractive to me, but there's nothing I like as much as hate.
Yeah.
So I was on the uranium thesis like white on rice, and I was in Kalgoorlie, Australia, the middle of nowhere, at a wild investment conference called Diggers and Dealers. Really a great big intellectual drunk. I met a guy named John Borshoff, who I'd never heard of, and he had a $1.8 million Australian market cap company, non-viable, in the uranium space. And I just couldn't help myself. Nobody ever heard of this guy. But I visited with him, and I said, so just out of curiosity, Mr. Borshoff, you got a $1.8 million market cap. How are you going to afford the money to explore? He looks at me, and he says, I don't have to. And I'm thinking, oh, God, spare me. But I decided to play along. I said, okay, so tell me, just out of curiosity, how you can have an exploration company that doesn't have to explore. So, well, I was the exploration manager for a parastatal controlled by the West German government, and I spent $1 billion looking for uranium for them. When they shut down the project and they were giving me my severance, I got them to give me their database. So I have $1 billion worth of West German exploration expenditure in my basement.
Wow.
I don't have to explore for anything. I just have to stake all the shit I already discovered. That was the best single answer I ever heard in my life,
Yeah, I do.
So we did a $2 million private placement in a $1.8 million company. Really, saved the company check.
Wonderful.
I remember we did the deal at a dime. This is a wonderful story. We did the deal at a dime. Way too early. Way, way, way too early.
Right.
Uranium didn't move for 4 years. And I was rewarded for my genius by seeing the stock go from 10 cents to 9 cents to 8 cents to 7 cents to 6 cents to 5 cents to 4. You get the point.
Yeah, I remember. Yeah.
At about a penny, I said, okay, I got to revisit my premise, right? I'm off 90% for my genius.
Mm-hmm.
I don't have a hold here. I have a buy or a sell. And so I revisited the whole premise, got Borshoff on the phone for 5 hours or something like that. I said, okay, I'm right. The market's wrong.
Yeah.
Sadly, I didn't get any penny, just like Exxon. I procrastinated, but I got some at 1.5 or 1.6. 6 years later, that stock was at $10.
Wow.
So that's the best story.
But
there are many stories, however, where I varied from my rules for whatever reason and got smashed.
Yeah.
So, Rick, your own personal wealth, has it been made on the markets, or have you created businesses yourself that has allowed your wealth to grow?
Both. I mean, I've made much more money as an investor and speculator than I have as a business builder. But I've been part of building a couple good businesses. Sprott Inc., which is listed on the New York Stock Exchange, bought one of my financial services businesses. And the consequence of that is that I'm the largest shareholder in Sprott Inc. I'm not an officer. I'm not a director. I'm not an employer. A New York Stock Exchange traded bank called Everbank, one of the first of the online brokers in the United States, was started on my living room floor. We built that business, took it public on the New York Stock Exchange, ultimately sold it to TIAA-CREF. I've been part now of forming 5 community banks, which were businesses that, I helped build. Well, that's not true. I backed managers, provided perhaps adult supervision, and I was part of building and selling an insurance company. So I have been a reasonable, successful company builder, but my heart is in investing and speculating.
When
and
you say insurance companies, were you talking about life insurance companies or general insurance companies?
Property and casualty businesses. My own insurance business now is involved in catastrophe and super catastrophe risk in the offshore oil and gas business. And my other insurance business is in environmental remediation and bonding in the oil and gas and mining businesses. I'm only interested in financial services businesses that are specific to things I understand.
And those businesses are not a crowded space either, I wouldn't imagine.
Yeah. Like most other businessmen, I'm a proven failure at businesses I don't understand. I'm a big believer in durable competitive advantages. I've made some truly catastrophic mistakes in businesses I understand. Imagine the difficulty that I would run into in businesses that I didn't understand.
So if you had to live life again in terms of your financial decisions, not necessarily business, but let's talk about speculation, would you miss the ride and avoid all the speculation, or would you rather have even more speculation because it's a lot of fun?
I wish my wife were here. She would tell you that, I make fun of speculators all the time. And then she'll grab the conversation and say, you understand that all of the money now that Rick invests sagely, he made by speculating wildly.
Yeah.
I mean, what I would have done is that I would have cast my financial life in an insurance wrapper much earlier. Insurance is, I think, the best business in the world as a business, if you are disciplined. The second thing is that around the world, governments want insurance companies to be hyper-solvent. The consequences of that is that you can over-reserve. And if you over-reserve, you pay less tax. The reason that Buffett pays tax at an effective rate of 9 or 10% is that he can set his policy loss reserves at any number that's feasible. They're consistently 6 or 7 times his policy loss experience. So that $200 billion in float that he talks about is really a deferred tax liability. And the idea that you can live your portfolio life as a prior taxpayer is something I didn't learn about till I was about 50. I wish I would have learned that lesson when I was 25. I have a partner still, that doesn't invest and uses the money that he extorts from me to make me less efficient in business. And I wish that I had understood the tax efficiency of insurance company investing when I was in my 20s.
But does that answer the question? Would you have taken more gamble or less?
Depends on the time.
I accept that
I'm underallocated. I'm underallocated as a speculator right now. I'm actively trying to take more risk. As you get older and the amount of money that you deploy increases, the availability and the scale that is offered up to you in speculation becomes less relative to your net worth. If I'm considering an investment because a bank has to divest a piece of the senior revolving credit facility at Exxon, I can allocate $10 million to that, and the decision takes 10 seconds. By contrast, deciding to invest $500,000 in an exploration project in Ethiopia or the Congo or Bolivia, where I really have to understand it, requires a lot of time, and I can't allocate much capital. So when you get old and fat and bald and rich like me, not only for reasons of risk avoidance, but really for reasons of capacity, both financial capacity and intellectual capacity, you gravitate more towards investing. You can't help it.
How many speculation deals do you have, do you think, in the market as we speak?
You mean how many speculative positions?
Yeah, I'm not talking about how much, just how many.
I think I have 52 names that I either own in size or by way of library cards.
Okay, and of those 52, how many do you think are going to deliver for you in percentage terms? And how many not?
100, of course, but
realistic, are we all 100%?
That isn't the way it works out.
No. If it was, genius. But I always tend to, not always, so I have found over the past few years that the ones that I think are going to do extraordinarily well only do quite well, and the ones where I think they'll do quite well are actually the ones that deliver 5-10 times return in a year, and you don't expect it at all. Do you find that at all or not?
It has really been variable. I mean, really, truly, it's been variable. I have had streaks as measured by the partnerships that I used to run. I mean, my best streak was in the year 2000. And if memory serves me correctly, that partnership generated a 79% compound internal rate of return per annum after fees. Wow. Truly, stupidly successful. If you generate what's functionally an 80% compound internal rate of return for 8 years, what happens at the end is insane. I had a different partnership. This would have been the 2005 partnership, where I lost 60% of my money.
Yeah.
So, my strategy probably did vary. I was probably more aggressive in 2005 because of the insane success I enjoyed in 1998 and 2000. I was probably more aggressive, more inclined to confuse a bull market with brains, more aggressive about putting money out because I lulled myself into the expectation of return.
Do you think at this moment in time, here we are, 2024, the world's has gone crazy in the last number of years in terms of the requirement to change to a greenification scenario?
Yep.
And all of a sudden, we need more metal out of the ground than we've ever physically needed in history. And yet we see junior explorers on the floor in terms of their valuations and nobody willing to back them, nobody willing to put money up.
I would disagree with that statement. Private placements, the financings that I've tried to get into in the last 2 years, are invariably oversubscribed. It's a very small subset of the juniors, but the private placements that I've tried to get into with high-quality people and high-quality deposits, there has been a lot of competition. We believe, we've done some work on this, not just me, but a young intern, that's finance speak for slave, has sort of back-tested the opportunities that we've been exposed to for the last 2 years. And the average private placement that we've tried to get into has been 50 or 60% oversubscribed. So when people say that there isn't money available to the juniors, I think that's a misstatement. I also would call your attention to the fact that most juniors aren't worth financing. If you look at the 3,000 or so public companies that purport to be junior mining companies on exchanges around the world, I don't know what the actual number is, I would suggest that only 15% are viable. If you merged every junior in the world into one company, we'll call it Junior Explorco, that company in a good year would lose $2 billion. Expenses over realized sales and M&A, stuff like that. In a bad year, which perversely they would think is a good year, a year where they could raise a lot of money, they'd lose $8 billion. So tell me what you would pay for a company that loses $2 billion a year. Would you pay 5 times losses? 9 times losses? In a good market, would you pay 15 times losses? The point is that if you, quote, invest in the sector indiscriminately, you will lose all your money.
Yeah. 100%.
That disguises the fact that maybe 5% of the issuers, and this, of course, goes back to Pareto's law, 5% of the issuers generate so much value that they add legitimacy and sometimes even luster to a sector that loses $2 billion a year. The sector would be in much better shape if 75% of the issues went broke and the capital that was left over was focused on the remnant.
Good. Okay, so Rick, obviously, you seem to give time to investors and also happy to guest on podcasts like the Roast. So obviously, thanks for that. And I know you urge people to go to ruleinvestmentmedia.com, list their resource stocks, and for no charge, you will rank them from like 1 to 10, 1 being the best, 10 being the worst. So we've kind of got a small job for you today. We're going to pitch a couple of companies each to you, and we want to kind of hear your thoughts and maybe pick, not necessarily a winner, but maybe rank them from 1 to 6. Or order.
How about 1 to 10? How about 1 to 10, where I'm familiar?
Yeah. Well, okay, let's do that then. So obviously, no doubt you will probably know 1 or 2 of these companies, and maybe you've already got some ownership in your portfolio. But let's start with one from me. So the first one is Sovereign Metals, arguably one of the best growth stocks in the junior resource space. Yep. They're listed on multiple markets, on ASX under SVM, AIM in the UK as SVML, and on the OTCQX as SVMLF. They're currently a market cap of around 175 million UK. The company controls the Kasia deposit in Malawi, which is the largest rutile and second largest natural flake graphite deposit in the world. The company has a PFS with key takeaways, mineral resource estimate of Kasia, estimate about 1.8 billion tonnes at 1% rutile, which results in 17.9 million tonnes of contained natural rutile and 24.4 million tonnes of contained graphite, 1.605 billion after-tax NPV on the project, and 28% IRR. They've been busy boosting the team. They enjoy expertise and technical support of mining titan, a major investor of Rio Tinto, who have a large investment in the company with 19.76% after recently increasing their position. And the company also gave a brief update on the south. Excitingly, all newly defined mineralization remains open at depth due to limitations of the hand auger drilling. The PSF was itself limited both in terms of deposit already known and in terms of what is clearly more graphite and rutile to be found. There's also a pilot plan. Obviously, that big news came in during late May when Sovereign announced plans to immediately start a pilot mining program at Kasia as part of its wider ongoing optimization study. And Sovereign is excavating some 150,000 bench cubic meters of ore from a test pit over a 3-month period using a combination of dry and hydraulic mining. Okay. Many think it's only a matter of time before Rio tables an offer for the company and take the whole shooting match. That remains to be seen, but things are certainly looking good at Sovereign. So over to you, Kev.
So the first one I'm going to cover is Conroy Gold in Ireland. They basically discovered a gold district related to the Clay Lake Nugget, which is currently in the Ulster Museum. It has a JORC report of 512 ounces on its Clontribrit wholly owned property, with potential to extend that out, as only 20% of that area has actually been put inside the JORC report. It's also discovered a second trend with visible gold at surface of 123 grams per ton. It has a market cap of circa 3 million. And one of the reasons why I chose it, because this really is one of the things myself and Charles have been talking about, those stocks that could do 100 times, not 10 times, but they could also fail as well, as we know. It has 100% of the licenses. It had a JV with Amor Export, a Turkish company that had no real experience in gold. They spent 6 million euros on the project, advanced it a lot more, especially in the Clay Lake project, which looks like it could be a huge 1.5 kilometers by 2 kilometers section of stockwork of gold. And they've done previous geologist surveys where the trend they anticipate could have 20 million plus ounces of gold. So it's likely as a near-term catalyst that if von Tribbert can actually be pushed forward, there probably is somewhere in the region of 2 to 3 million ounces of gold in that particular scenario. It's tightly held stock with a few large shareholders.
Sure. I think I'll go for Power Metal Resources first, because this is one that I've been covering for a couple of years, and for some reason, it doesn't seem to want to rise. Eventually it will. I'm confident of it. One day it'll just rocket. But when I look at Power Metal, it's a merchant banking model. They've got so many assets all over the world. The ones to focus on at the moment, there's a Athabasca uranium joint venture with ACAM. That's worth up to £15.2 million to the company. £10 million of exploration plus cash. Power staked massive amount, 100,000 acres of real estate in the Athabasca Basin before the uranium bull run. And now they're on the verge of signing this really great joint venture deal. They're also on the verge of launching either Power Arabia or some kind of joint venture in Saudi Arabia, where a few months ago, back in January, Power was one of the few companies that managed to sign a memorandum of understanding with the Ministry of Investment of the Kingdom of Saudi Arabia. So they're bringing that expertise, that exploration expertise, into a country that kind of desperately wants it. And then on top of that, they hold almost 50% of the shares in Guardian Metal Resources, rebranded from Golden Metal, which has the largest undeveloped tungsten deposit on US soil. And we recently saw China banning or very heavily restricting the export of antimony. And I reckon that tungsten is about to get banned as well. When that happens, grant funding from the US government for Guardian Metal is going to happen. That's going to impact on the metal share price. So which of the three, Rick, would you say is the best at the moment? I reckon I could guess.
Let's take them from the top. I have Sovereign as a 4. Ironically, I love the validation that Rio Tinto gives. I think that Rio Tinto is going to lob a takeover offer, which means they're going to limit my upside.
Yeah.
I think that Sovereign, left to its own devices, could, over 5 years, be a 10-bagger. This is a Tier 1 deposit, which to me means over $10 billion in situ recoverable reserves and resources, return on capital employed in excess of 25%, leverageable, and likely to be in the lowest cost quartile worldwide in its topics.
Yes.
Unanswered question, ironically, the size of the deposit, it almost certainly gets bigger, but process and product quality in the graphite are the unanswered questions. I love Sovereign. Note for your viewers, a lot of conflicts here. I own a boatload of Sovereign.
I own Sovereign. I think all of us here own Sovereign. Is it a question for you? I mean, I guess that Rio might throw out $2 billion US. Do you think that's a reasonable valuation?
I have no idea.
You can't say it. You don't know.
The good news about having Rio at 19% is that you have Rio at 19%.
Yes.
The bad news is a competitive fight. They're in a 100-meter dash, and they started on the 20-meter line.
Yeah.
That is going to be an impediment to the Glencores and the BHPs of the world who might compete with them. It's really difficult to have an auction with one bidder. But that's the difficulty they have. Now, what this means is that I'm almost certain to make some money as opposed to as much money as I'd like to make. That's not a bad outcome, where my downside is an upside.
Rick, when you say it's a 4, what does that mean? Okay, you go in from 1 to 10. What
1 to
does
10.
4?
I'm an extremely harsh ranker.
And 4, 1 is the best, or
1 is the best.
Yeah.
1 is the best. 1, by the way, means that I think it's selling for half of immediate liquidation value, where I think that within 2 years liquidation will double, and where I think that in 5 years, I'll have a 10-bagger. My last one was ExxonMobil when it got thrown out of the Dow 30. My last one before that was Ivanhoe Mines when it was selling at 63 cents a share with 93 cents a share cash in it. and the Kamoa-Kakula discovery. So my rankings are very, very, very hard, very harsh.
So what about Conroy then, or go to the next ranking then?
Yeah, let's go to Conroy. It's unranked. I don't know enough about Conroy to discuss it intelligently. My knocks against it were I didn't know the management team at all. Ireland does not have a history of being economically generous with large deposits. It has yielded up a fair number, particularly in the zinc business, of smaller high-grade.
Galmoy was the same management that did Galmoy as Conroy Gold.
Yeah, I got it, which, to me was a moderate success. It wasn't a world-scale success. When I looked at the resource base, I could see 500,000 ounces there. I could see the chance that it might double. But for me to be interested, I have to see the probability of 1 million ounces or better. I'm not trying to say that stocks can't work otherwise, but from my viewpoint, I need large targets. So I don't have the company rated. I understand.
2 million is your sort of cutoff, isn't it, from what I remember?
You mean market cap?
No, the ounces.
No, the ounces.
A million. But
okay.
I really have to see some data that suggests to me, I have to see where it's going to come from. I don't always get there, by the way. You have hole A and hole B, and you put a hole C in between A and B, and you get dusted. But I have to see spatially how it could occur. But Power Metals I own. Power Metals is a process stock. I own it because I used to make a lot of money myself building shells, a lot of money. And in the process of shell building, I think the worst I ever did was a 40% internal rate of return.
Wow, that's not too shabby.
I'm too old to do that anymore. I can't allocate $250,000 against 19 months of my life. I can't do that anymore. The guys at Power Metals do that. And the idea that I could participate vicariously, in other words, I could put up some money and they could do all the work. They would show me the opportunities that they generated, and I could follow on, participate if I wanted to, but mostly because they can build a machine in shell building similar to the machine that I built in the 80s and 90s, and I can participate passively. That's something I want to do. They also could be an eye on AIM. I'm inefficient in the London market because AIM is a shitty market, and I don't go there. But the fact is that there's a lot of good mining entrepreneurs in London. There's a lot of money in London. It wasn't a shell market that I ever tried to compete in. I competed both in Perth and in Vancouver. Well, but I'd rather somebody younger and stronger than I do that business for me, and that's why I own Power.
So you don't have a ranking for Power?
I do, 5.
Okay, very good.
And I own it relative to the trading liquidity. I own it in size. I may be the largest shareholder. I don't know.
Okay. Right, Phil, do you want to start with your second one then?
Yeah, so my second one, and you might like this one, Rick, is the fact that Rio Tinto are involved in a joint venture sense. So it's Aterian PLC. They're listed in London under the ticker ATN with a market cap of 7 million, a critical metal-focused company engaged in an exciting phase of exploration and development. Aterian's collaboration with Rio on their Rwanda lithium project showcases their potential to impact the global battery metal supply. They recently completed extensive soil sampling in Rwanda, identifying key areas for lithium-bearing minerals, and are poised to start drilling next month. In Morocco as well, Aterian oversees a substantial portfolio across 900 square kilometres, exploring for a copper, a venture that could yield even greater results. They're not just about exploration. Aterian also is set up a metal trading entity in Rwanda, aiming to generate early revenue to fund further project developments. This dual strategy of immediate revenue generation paired with significant exploration potential could position Aterian uniquely in the market, offering a compelling, diversified investment opportunity in critical battery metals and copper essential for global energy transition.
I do not own Aterian. I know it. I have it as a 5. I interviewed them for the Mining Journal Select conference, which is how I came to know them. The Morocco assets are not advanced enough for me to understand particularly, although I'm going to Morocco, and I'll come back with a much better sense of what they're attempting to do in Morocco. I know the people who generated those assets, and I've known them for 25 years. Those assets were spun in to create Aterian. I'm intrigued by what they're doing in Rwanda, but again, there isn't enough data. I'm particularly intrigued, though, that because of the company's background, the executive background, they were able to tempt Rio in very early on. In fact, it's a fairly soft joint venture with lots of exits for Rio. I also believe that for the next 2 years at least, the bloom is off the lithium rose. So the idea that I would get some sort of back breeze as a consequence of the fact that the moron stormed into lithium is a low probability. But despite the fact that I don't own it, the market capitalization relative to the expertise of the people involved intrigues me. The metals trading operation, I've known a lot of people who started metals trading operations, particularly informal, and I assign that a negative net present value. I think it's a distraction and likely will fail.
You should go to Rwanda and see the gorillas anyway. Never mind, it's amazing.
I've done that.
Yeah. We were there last year. We visited Tyrian and a few of the different places, and then we went to see the gorillas.
I've done that in Rwanda and Uganda, and I recommend it to anybody.
Yeah, it's a life-changing experience for sure. When you see the silverbacks come out, it's phenomenal.
I'm going to go with Galileo Resources, which is an explorer predominantly in Zambia. Any of the Zambian explorers, whether it's Arc Minerals or Extract, Galileo, Bezant, there's a few of them. That's just on AIM, and obviously there's more. Anyone exploring in Zambia going after copper, I think as long as they've got decent tenure, it's worth an investment at the moment. Galileo has a variety of assets as Luan Sobe and Shinganda, and then a Northwest Zambian joint venture with a Kukulemon consultancy. All of these have resources of some kind, but they're all being drilled at the moment. And this is the thing for me, it's money going into the ground during the drilling season. Shinganda, we've got a 2,400 meters of reverse circulation drilling. The Northwest Zambia joint venture, there's going to be just 700 meters, so just kind of a starting phase 2. And then there's exploration going on at Luan Sobe as well. All of these assets have copper there. Luan Sobe in particular is very interesting to me because a mining license was issued a couple of months ago. But then on top of that, it's just 15 kilometers from the Mulfalira mine, which, as we all know, produced 9 million tons of copper. Now, if you speak to any kind of a geologist who has kind of experience in Zambia, particularly in the northwest, they will tell you there's tens of millions of tons of copper to be discovered, and this is a metal that everybody wants, which I find quite interesting. I mean, copper at the moment is kind of like, the word I don't want to use is sexy, but it's a sexy mineral that everybody wants. But you can understand why.
It as the new oil, didn't he? I mean, it's
it's what people want. And you can understand why when you look at the supply gap. And yet, interestingly, like lithium is kind of collapsing, as you just said, Rick. But, I look at lithium stocks at the moment, I think they're very good value, and nickel as well, based on what's happening in Indonesia. But I can't help but look at Galileo and other stocks like it in Zambia and think Zambian copper is where you want to be over the next few years.
I had the very good fortune of underwriting First Quantum at 65 cents.
Wow.
On its way to $100. So I have a particular fondness for Zambia. It made me look smart against all odds. And I agree with you in terms of the exploration upside. I'm concerned about small copper explorers who are exploring too much with their own money. I think the role of a junior in Zambia is to address the political realities of Zambia. I said that politely, didn't I?
Yes.
Acquire the concessions, and then having de-risked them from a social and political point of view, bringing in a joint venture partner. I don't follow the company for just that reason. I'm attracted to copper exploration. It's been extraordinarily good to me in my life. But my exploration model is very much that the juniors should use their expertise in other people's capital. And as a consequence, well, as I remember this story, there are 2 joint ventures in their portfolio. Perhaps there's 1 joint venture in their portfolio. I'm concerned about their ability to pursue expensive frontier sole risk exploration on their own balance sheet, so I don't follow it.
I think that may change.
African Pioneer is probably the one in that stable then that has a joint venture with First Quantum.
Right.
In Zambia, in that northwest region.
And my favorite business model there is sort of a plethora of lottery tickets, which is to say a prospect generator that generates and turns 4 or 5 projects a year, so that at any point in time, they have fractional interests or royalty interests in 15 or 20 exploration programs. I've been a continuing funder of the prospect generators. Most people say, well, you don't end up with 100% of the property. The fact is that the anticipation of success is that 1 in 3,000 mineralized anomalies becomes a mine. The idea that I would dilute myself for a 1 in 3,000 chance of success so that I could have 100%, I would rather not dilute at the intellectual property level, and I would much rather dilute at the property level, which I realize makes me dumb.
I'm absolutely with you, Rick. But the reality is a lot of us are investing in this for that dream ticket.
Yep.
And that isn't necessarily a wise investment.
Go your best lick, go your best lick.
It's the dream ticket, isn't it?
It's the dream. It's the
living the 10-bagger dream.
But then, it's funny because sometimes you'll see a joint venture signed or an earn-in or, whatever, and the terms don't look that good and everybody's complaining. And you're sitting there think, well, do you know what? 30% of a potential discovery is better than 100% of a patch of dirt that you can't afford to explore by yourself.
That's correct.
People don't want to hear it.
Simple arithmetic. And most speculators hate arithmetic. They prefer narrative.
Yes.
Just like most speculators would prefer to pull the handle on a slot machine. And I would prefer to own the slot machine.
Yeah. Well, I mean, I've had this conversation. I had this conversation with another analyst a few days ago. I was saying, you can go to a table in blackjack and put $10,000 down, right? And you've effectively got a 50-50 chance of doubling your money. So if you just want to gamble, then gamble. But if you're speculating, then it's a different kind of game.
Or you try and own a piece of the table.
Yeah, well, that's what you try to do, isn't it? Yeah. You want a piece of every table.
The house always wins, as they say.
Yeah.
Okay, so the last one we've got is a company called Jubilee Metals, another one that has come from Africa, this part of the world. It's now in the top 3 chrome producers in the world, with the PGM byproduct all based in South Africa. Next year's chrome target, 1.65 million tons estimated for 2025 for the chrome with added on, but PGM is profitable still, but with the PGMs under scrutiny in terms of price at the minute, it's not doing so well. But the exciting part of this one, and why I chose it, is the progress expected on the copper in Zambia. They have 2 processing facilities, one at Rowan and one at Kabwe, which now have the capacity to generate 25,000 tons of copper in both cathode and concentrate form. We visited these places last year, generating huge revenues of circa 225 million, with probably circa 100 million plus of profit in dollars. There's a market cap of circa 170 million pounds sterling, or $220 million US dollars. It looks to use its systems to progress by adding on more and more processing facilities as they go on. And the final kicker is it signed a deal for a waste rock project with IRH, who basically out of Abu Dhabi, who basically spent 1.5 billion with the Zambian government to buy the Mofalera complex. And that's where or buy 51% of that mine. And yet that's just down the road from where Luansobi was in Galileo, as we said. So what's your thoughts on Jubilee Metals, Leon?
I'm not unattracted to Jubilee. It's cheap. Their returns on capital employed and their margins are very variable. And I think that you are exposed to political and social risk in South Africa, including, of course, the politics of envy. I don't own Jubilee, but I have it as a 4 on a valuation basis. The retreatment in Zambia, I assign no net present value to. I found that most often in those circumstances, the major that controls the rock has squeezed out as much value from the rock as can be squeezed on reasonable margins. So as I say, I have it as a 4 on a valuation basis, but I don't own it. And I need to say, gentlemen, I have to step off. I have to be in another call a minute ago.
Okay.
No, that's fine.
Yeah, really. On that note, we'll say it's been a fantastic, time with you, Rick, and we really value your insights into, everything we've talked about. It's been a fantastic experience.
Yeah.
Well, I look forward to a rematch.
Rick, can we ask you one question just before you go? And it's a very, very quick question, because you're on the Sunday roast. We have to ask you, what is your favorite roast dinner?
Oh, God. My list of top 10 favorite foods has 54 items on it. I like everything. I guess if you had to pitch me down to one thing, it's not really a roast. My favorite food is probably abalone, but it's so stupidly priced I can't bring myself to buy it anymore, despite the fact that I could afford it. If I was coming to London, I guess that would probably have to be the classic old either a lamb roast or a beef roast. both of which I dearly love. If you could see me, you could see that I love them too much.
Excellent. On that note, we'll
Thanks
say
for that.
Rick Rule, renowned
you,
investor, financial commentator. Thanks very much for your time.
Cheers, Rick. Thanks for your time.
Thank you.
Well, that was an enlightening conversation. Always an experience to meet new guest speakers, and obviously someone as influential as Rick. Obviously, we've all probably seen a lot of his podcasts and his interviews in the past. What did you make of that experience?
That was a wonderful conversation. I found that it kind of like speaking to a kindred spirit. He's saying the things I've always thought, but he's putting them together perhaps more articulately than I can without writing them down. I do think that, you know, his way of ranking companies, he has his own way, and clearly he's been extremely successful. So I feel like I can't critique it. But at the same time, I think that, you know, some of these are risk assets. So if you're going to invest in risk assets, then maybe you need to taper it a little bit.
Yeah, I mean, maybe they were, I won't say they're the wrong companies to bring to him, but maybe they were a little bit too sort of embryonic in their design. Maybe it does look for more in terms of revenue generation. I know he invests in some of these project incubator type companies, but maybe they are a little bit too sort of early on in their, you know, in the Lassonde curve.
Yeah, well, I think with Sovereign Metals, I think was the one that surprised me, because he said, you know, obviously he's very enthusiastic on the company. But he said Rio Tinto's involvement means that the upsides are limited because, you know, effectively that's the only buyer that you're going to have for the company. Which, you know, unless they develop the mine themselves, that's probably a fair comment. But in my mind, I'm going, well, you know, if Rio Tinto does make a buyout offer, happy days, thumbs up. You know, for me, that's, you know, I'd rank it, you know, as one of the best.
Yeah, but I think he wants more upside to them.
He does.
Production, doesn't he?
Yeah, but then I think that's the advantage you can have when you've got millions and millions and millions of dollars, you know, at your hands. I think you think about the market very differently to potentially what we do.
Yeah, because he's basically got the ability to buy some of these small caps out completely, you know. Yeah. But he can't invest maybe more than £200,000, £300,000, £400,000, £500,000 in something that's worth, say, even 10 million, because he doesn't want to take too big a position in some of those. Yeah, I mean, it was interesting. I thought his take on Jubilee Metals was good. I thought you know, he obviously rated that the same as Sovereign at 4, I think it was. Power Metals a 5. I'm not sure he was as up to date as we think, because I can't understand how Power would be a 5 when GMET actually encompasses the whole market cap of power metals right now. It's just mental, basically. Things like Conroy Gold, obviously he's heard of them, but I think he knew little about it and obviously didn't give an opinion then in terms of not rated. So yeah, I think the very small companies that we're basically looking at maybe just doesn't focus on them at all until they appear to be a bigger size, if you like, sort of £50 million and above, probably, you know. And that was one thing that came to my mind about GMET, actually, is that more than likely when GMET gets to the £50 million mark, you're going to have some of these small cap funds starting to look at it.
Yeah.
I imagine.
Yeah, I mean, well,
before that, no, probably not. But it's not a million miles away from them starting to look at it, I think.
Well, I think it's all about, for GMET, it's all about strategic financing. So if the government grants come through over the next sort of 3-4 months, if China imposes export controls on tungsten like it just has for antimony, then Pilot Mountain becomes a strategic project, more so than what Oliver's marketing it as. It, you know, objectively, those two things will make it strategic, and then the funds will pour in. They must do.
Yeah,
they'll have to.
And then Power Metals is, I mean, it's gone down this week because there was a slight delay on the uranium thing, and again, just mental. It's like,
well, it's August. No one's working, Kev.
No, but even so,
apart from Charles.
From Charles. Oh, yeah. I know, it's funny.
Charles.
Whenever someone says they're going to get something right, Alien Metals is the same. You never get anything through in August. It doesn't happen. The lawyers are all on holiday. Everyone's at the beach. Just September is when it goes through. But I mean, with Power, yeah, I mean, you've got the Athabasca JV, fantastic, worth up to what, 15-16 million pounds. You've got Guardian Metal, and that's worth what, 20 million or 15 million, whatever it is, to Power. But then there's Power Arabia as well. And Sean's been quiet on that, but he's working on, you know, it's like a duck with his legs paddling under the surface.
Yeah.
There's going to be an announcement there soon. There must be something big.
Yes, no, I see that those three prospects, you got GMET probably worth circa 18 to 20 million pounds. You're going to have the uranium, which should be worth in excess of 10 million pounds. And you've also then got Arabia, which should be worth in excess of 10 million pounds. Talking about raising 10 million pounds.
Yeah.
So let's say 10, 20. That's 40 million pounds, and our metal currently has a market cap of about 18 million. So, and that's without anything else in the pipeline. They've got First Class Metal, 23%, I think, of it as well. Mm-hmm. They've got So what I saw from Rick was we presented him some ideas, and actually we had probably more knowledge on those companies because we're dealing with them day to day than he did. Obviously, even though he's an investor in those, because he's got that much going on. So, but I found it fascinating. He was a great chap to talk to, and sadly we could have talked for a lot longer, but he had to go. So, I think we could have gone on and on and on. We have asked him to come back, and he sort of intimated that he would. So let's hope we can do it all again.
Yeah, I mean, the last thing I wanted to say on Rick, because I hadn't met him personally before this, he's just a funny guy. A lot of these people don't have a personality, but he really, really does, and it shines through.
And I think we brought after, I watched quite a few podcasts sort of doing a bit of due diligence, beforehand. And in the other interviews I've seen, he seemed, I wouldn't say quite rigid, but he seemed quite relaxed in the interview we did, and he was laughing a lot, and he seemed at ease, which was good to see.
Yeah, absolutely. You'll be able to see the video version of it as well as the Sunday roast. That'll be released early next week. So
we'll put the link to the YouTube video in the description for this podcast if you want to see the video.
Yeah. So what's been happening on the market?
Okay, so let's have a look at some of the movers and shakers. I mean, the best mover I've seen in the last 25 trading days is, funnily enough, suspended for pending financial reports. That's Penn Petro, up some 300%. I wanted to get your guys' your take on this whole sort of financial auditing, delays in companies, and the fact that I've heard quite a few CEOs and people say that they simply cannot get the auditing companies to do the work for them. What do you make of this?
There's three things. The first is that the new auditing guidelines and ESG requirements are really strenuous. So they take a lot longer for accountants to do. They're also a lot more expensive, incidentally, for very little benefit. Yeah. And so what this does is this actually created quite a novel problem among AIM, as though we don't have enough, which is that some companies cannot get their books signed off in time, right? And therefore they have to suspend. Those are the rules. And then they unsuspend a while later and everything's fine. And other companies use the excuse that they need to suspend because they can't get the book signed off, when in actual fact they've got a major problem that they just want to cover up for a bit and buy more time. I think the new rules are ridiculous. I think that the whole purpose of a growth market like AIM is to be light touch regulation. And this is why the Aquis market is starting to take more IPOs and more companies, because it's too much work. It's too much work for them. I do get that you want to regulate the companies and you want to get, investors should know what they're investing into. But it's when you speak to a CEO, this is too onerous, it seems to me. What do you think, Ted?
Yeah, agreed. The whole initial scenario with AIM, and to be honest with you, AIM seems to me like it's a rudderless ship at the minute. This is the problem as an entity. It doesn't really know what it's doing. We've had some companies being complaining, to FCA for stupid situations, like quite obviously something that isn't relevant, and they're wasting their time on that. And then we've had this situation, as you say, with accounts not being done. And I think there is a fundamental problem with the accountants, which is obviously causing a problem. It's also causing, you mentioned the cost, but it is significantly more expensive.
It is
a little bit more expensive. It's maybe double, treble the amount of money that they're going to have to spend on accountants. So do we really want this in the market where the costs are already high for small market capitalization companies to add an extra layer of this on top of it? And yet you don't get the same situation or the same problem in Aquis. And I think we're going to see a flight to people listing on Aquis. And we've already seen, what have we seen in AIM so far in 2024? How many have delisted? I think it must be 40, 50 companies at least.
Yeah, it must be at least that. And those are the ones you've heard about, So why make it worse? It feels like, I've put out tons of reforms that I think could work and be a lot better for the market. And yet they go after the one thing that could make it even worse for companies. I don't get it. I don't understand it at all.
Yeah. No, it doesn't make sense. It doesn't make sense at all.
Yeah. We've seen some news from Zambia, Charles. We've obviously seen Galileo commence the drilling at their northwest licenses on license 28001. And we've obviously also seen ARC Minerals announce that the Zambian drilling commenced within a day of each other. That was at the sort of 7th and 8th of August. What do you make of that news?
I think that, and I've said this before, Zambian copper right, in this part of the world. Multiple independent geologists have said there's 25 million tons of copper to be found left out there. We are in a world where the major copper mines in South America, the grades are running down, the production is falling, governments there are, starting to tax them more or, become a bit more problematic. Zambia, at some point, one of these companies, I think Arc's got a really good chance, but I think that, Galileo Extract, these are African Pioneer, they've also got decent chances. Tertiary Minerals is out there doing a little bit with their JVs. These kind of small cap UK listed companies, some of them, some of these companies, whether it's a joint venture with Anglo American or First Quantum Minerals or Cobalt, they're looking in the right place. Somebody's going to hit the jackpot. The only way you're going to do that is via drilling. And when one of them hits the jackpot, the rest of them are going to shoot up because everyone's going to think, who's going to be the next one? And you saw this when Greatland Gold and Asgard Javier on a few years ago. All of the other players in the region got a huge boost, both in terms of public profile, but also in terms of share price. So I'm really hopeful. I think it's going to happen within the next 2 or 3 years. Someone's going to find the next big thing. I think it'll be Zambia. I think it'll be copper. And then I'm just hopeful, because a lot of people who have been invested in these companies, all of them actually, are down kind of quite substantially over the past 2 or 3 years. But if they find something good, then it becomes irrelevant. The share price will just rocket. Like Greatland went up sort of 70, 71 times over the space of a year or so. This is something that we could see again in Zambia. What do you reckon?
I'm in complete agreement. Yeah, I think it's the Zambia is the place to be for copper. I wanted to ask you, while we're on the subject in that region, I know you've talked about them in the past, going over the border into DRC Congo. Tell us a little bit about Rome Resources and why you sort of have written some articles on that. What put that on the radar?
So the first thing I will say is that my entire investing career in junior resource, I've avoided the DRC because as a jurisdiction, it is just a nightmare. And anyone who invested in the DRC companies will know that license issues, government being difficult, with Chinese getting involved. The ABV Monono deposit is a classic example, but there's countless others. Now, the reason I've invested in Rome, there's two. The first is the involvement of Klaus Eckhoff. Klaus has managed to find, discover, sell off mines, huge valuations, hundreds and hundreds of millions, multiple times. He's got really strong government connections. He's had no issues in the past with regulatory issues. So he's a strategic advisor to Rome Resources. Now, Rome is next door to, it's exploring the Busy North deposit, which is next door to the Busy deposit controlled by Alphamin. Alphamin was founded and chaired by Klaus. The exploration team at Rome discovered the Busy deposit that Alphamin controls, and Alphamin now has a 1.3 billion Canadian dollar market capitalization. So you have a perfect exploration team, you've got tenure which is extremely prospective, and you've got an obvious buyer should you find anything. We're already on to the third drill hole now, as of today. The first 2 drill holes have found significant mineralization. There's 2 more diamond drilling rigs coming out. That's either today or early next week. And there's going to be a mineral resource by the end of the year. So to my mind, it's kind of a slam dunk. I think what's holding it back at the moment, I believe there's a seller in the market for whatever reason. It's the first one. But the other is just for DRC. I think you guys will probably agree. It's a jurisdiction I tend to stay out of. But because we've got Klaus, it's fine. If Klaus leaves, I'm gone. By the way,
as a country, the DRC is probably the most mineral-rich country in the world. There's nowhere like it.
I've seen videos where literally the copper is sticking out of the ground. Right, you don't even have to take off an overburden; it's just there.
But everything, copper, cobalt, uranium,
lithium,
most of the rare earths, everything, lithium.
Well, Monono is the largest lithium deposit on Earth. Right, like it's there's no wonder there's a massive legal fight over it.
Katanga is massive as well, isn't it?
Yeah, huge. Like there's huge deposits. I think the other thing is, there's obviously has been for ages, but there's conflict on the border between the DRC and Uganda and has been forever. It's worth pointing out this is 200 miles away from Rome. And whenever there's been kind of border controls with Zambia or Uganda, Alphamin has always found a way to ship the tin a different direction. So it's not really a problem. 200 miles by dirt roads, some of them are impassable. I think, for context, it's kind of like, rioting going on in London, but you have a deposit in Exeter. It's a good way of thinking about it. Yeah.
Okay. Let's move on. Let's have a look at some helium stocks, because I know Helium One have had a bit of news recently. But what about Georgina Energy? What can you tell us about that? Because I've seen you also sort of run a few articles on that.
Well, so the helium space at the moment, I know there's a couple more looking to launch on the market before the end of the year, but you've got Georgina, as you say, There's Helix Exploration, there's Mosman, obviously, which, a little bit tied to Georgina, and then a couple of others. But Georgina, so they've got 2 assets. And I think the problem that they've had in the market is Tom Winifrith has decided that this is one that he wants to go after, and he thinks that it's for whatever reason it's not a good opportunity. So what he's done is he's highlighted a lot of known variables, which all the investors knew, but refused to look at the potential positives. I think this is effectively what's happened. And the point is, I think the key point to understand is that they're going into assets where wells have previously been drilled. They have to drill them further to discover whether there's helium there. There is exploration risk, but the upside potential is, into the hundreds of millions. So, and I think, on one of their assets, the chance of success is something like 8%, which sounds low because it is low, but that's what exploration is. If you look at Helium 1, I think their initial chance of success was something like 11%, 12%. So this is one of those companies where I think if you want to invest in an explorer, it's a decent opportunity. Helix Exploration is the other. Obviously, Georgina RTO'd recently. Helix IPO'd at 10p a few months ago. I think they're around 20p now, having come off the highs. But Helix is, in my view, probably the best of the bunch at the moment. But that's simply because there's so much near-term news flow. Hydrogen's there, helium there, wireline logging is coming in now. You're going to find out very soon if they've got something really commercially viable. Yeah. But there's fantastic news.
Yeah, I saw that. Was it the Clink #1, wasn't it? I think they completed the drilling there at that target, and as you say, that the wireline logging and appraisal was an extended flow test. So, how long do you anticipate the results for that one to be delivered to market?
A couple of weeks, maybe. I mean, one of the issues that we've had is that in the first 2 formations, you're looking at elevated helium up to sort of 150 times background level, so amazing. And then the next 2 formations below those 2, within the same drill, they encountered elevated hydrogen up to 10.3% H2. And the problem with that, and it's not a problem because it's an additional opportunity, but what it means is that you can't report to the market what percentage of helium you have, because the standard tests that you use to determine whether helium is there, whether gas chromatography or mass spectrometry or thermal conductivity, it confuses helium and hydrogen. So in those 2 formations, the last 2 formations just been tested, you can only know what you have in those 2 with wireline logging. And so you've had the markets gone, hang on, this now has become a binary risk play, because even though there's 4 bites of the apple, because there's 4 formations, you're going to know very soon if they've got something viable or not. And therefore it's either going to rocket or it's not.
Well, it's almost like I know it's the same thing. It's a drill. It's like an oil and gas, the duster element. But I mean, when is the best time to invest in this? Do you do it pre-wireline and get the rise and slice them out, or do you go in on the morning of a good RNS potentially if it confirmed that there is a helium system? What is the best time? How do you play these ones?
It's tricky, isn't it? I think the thing is you tend to get huge rise up until the point where you sink the drill into the ground, which is what Helix saw.
Pre-spud.
Yeah, all the excitement, and then a lot of people sell out at that point because they don't want the risk, they just want the free money, which makes a lot of sense, to be honest.
Are the upsides more than the downsides, though? In other words, if they did confirm a system, would it go, let's say, 80%, or is it more likely to drop 80%?
Well, this is the thing, isn't it? My perspective is that in this particular asset, because Bo Sears, who literally wrote the book on helium, has handpicked this asset, you have a higher chance of success than you might otherwise have, even including the official numbers that they've put out. I think the upside potential to this one, at the moment we're kind of around 20p, and hovering just under. The research note out on there is 93p was fair valuation. But if it's successful, I think £2 might be possible. And so you're a potential 10 times upside, and they know that they're going to be able to finance a production plant as well, which should be fairly cheap, significantly under $20 million. So in my mind, I think the upside potential here is huge. But I think the reality is that some investors, didn't understand what the most recent RNS actually meant because they don't understand enough about hydrogen or helium, which is fair enough. But B, and possibly more importantly, you're going to have investors go, well, I've doubled my money already. So I might 10 times it from now, but if it's a failure, I might lose what I've already made. So you have to make a decision. I'm quite, my personal view is that if you're going to invest in a risk play like this and they're getting cracking, they're not, sometimes they just bugger about with, exploration stuff. Well, I think surface exploration for like 2 or 3 years and you just think, what's the point? With this, we're going to know, in short order. And I think if you're going to go after exploration rewards, then Helix is one of the best to go for. When Georgina gets cracking, I think that's one to look at as well. And yeah, I mean, the biggest thing to understand really about all of these is that helium is probably the hottest thing on the market at the moment. You know, back in 2022, it was lithium. Next year, it might be copper. It could be gold, given how high gold is rising. But anything in helium is just red hot. And there's not many helium plays on the market. That's the other issue. You know, so, but that's going to change because I think a few more are going to come because they've seen how much appetite there is. Like all of these things have been hugely oversubscribed. And then
what about Voyager? Because I think Voyager has a helium play, doesn't it?
Yeah, well, Voyager, it's trying to think of the words. Voyager is a little bit different to the others on the market. The first reason is that not many people have heard of it comparatively. Have they? I mean, that's
they need to change the branding because when I last looked, they still had the cannabis, you know, all the cannabis.
Yeah, CBD play that's gone into helium. So
yeah, but I mean, the thing is, you know, like was it a couple of weeks ago now? August has been kind of a haze for me. But you've had production commencing at 2 additional wells, and you know, there's a good chance they're just going to make money. Essentially, I mean, so it's a different kind of prospect, isn't it?
I think one other I want to mention to you, Charles. I want to get your take on it because I've seen a lot of chatter on the boards about this one of late, which just seems to have sprung, but it's been on our radar for a while. This is Firering Strategic, and they had a nice RNS in the week related to their quicklime project.
Yeah,
they've obviously engineering work at quicklime plant has advanced. Their crushing plant is fully operational, but with a market cap of 5.8 million, this one seems to be pretty much under the radar with a lot of upside. Give us your thoughts on that if you've done any sort of
I've done some initial research into it. The first is, you know, it's in Zambia, and I'm a big fan of Zambia, and obviously the quicklime is used for the copper. Fantastic, you know, so it's really well positioned. It seems to be really, really undervalued. I'm currently doing due diligence on it at the moment, so. If I uncover anything bad, I'll let you know. I don't think there is going to be at the moment. The only question I would have about it is financial contracts it has with partners, and you know how those are being negotiated at the moment to get everything cracking. But I don't know enough about that yet. When I do, I'll let you know. What do you? I mean, on the surface, it looks very cheap.
Yeah, absolutely.
Yeah, it was one of our 5 gold rings that we chose at the start of this year because we spoke with Silius.
Don't worry, I made a silly joke. 5 gold rings, right. Fire ring. It doesn't matter. Doesn't matter.
But that's why it went in. That's why it went in. The name matched, so we thought.
We don't know if it's any good or not.
We met Vasilius in December, I think it was last year,
and Lincoln as well.
And Lincoln, yeah. Hopefully, we're going to speak to Lincoln in the not too distant future because I've been trying to get hold of them through somebody else. But yeah, I think it's got a lot of potential. I think the financial situation in terms of what it needs to produce is all there. And I think if the copper production in Zambia goes as planned, then they're not going to have any problems selling this stuff. Even Glencore, I think, may well come back and get it themselves for the DRC, for their production in the DRC. So I think it could be a real moneymaker. And then subsequently, because there's been lots of stuff on social media showing that the kilns are being tested and they're ready to go to produce the quicklime. So, yeah, for us, and I'm just going to go to those 5 gold rings again. If you remember, the 5 gold rings were all about, maybe high risk, high reward, but obviously things can go down as well. We've had one big success in Cantera so far, but it's only just begun in Cantera, and we're about to have a very exciting September, I think, for that. But you've also got first-class metals, which is starting to look very interesting. Certainly on Friday, started to move up after it raised the money. And you've got the firing as well. And the other 2, extract resources, which, to be honest, I don't understand why that's been beaten down so much. I really don't. But we've talked about that before. The cash is going to be coming in, and I don't understand that. And then the other one is energy pathways, which is also seems to be there's a bit of a buzz in the market about energy pathways in terms of the fact that it's going to be doing some of the storage in the Irish Sea and also producing, onshore or gas that can then be pumped onshore and used in the UK. So I'm actually quite excited about those 5 gold rings. I think towards the end of this year, we could see some real movements in all of those.
Well, I think, Well, firing in particular, because it's picks and shovels, right, which people love. So if copper takes off, they don't care if you find copper or not. They're the ones selling the picks and shovels. In the gold rush in Johannesburg, it was the hotels making the money, before any of the gold producers. So yeah.
Yeah, absolutely.
Okay, well,
Absolutely.
I think is there anything else you want to talk about? Kev maybe mentioned COBRA. We had a good interview. We had a good interview with Rupert this week. What would you want? Any thoughts on that?
Yeah, COBRA Resources. If you want to buy the opportunity to be in rare earths, it looks like from the figures that they're able to get the rare earths out, which is always seems to be one of the problems with the rare earths, that they can actually realize the rare earth itself. This project looks like it's, as he said, district size. It's a massive resource. It sort of reminds me a little bit of the sovereign metals, in terms of the potential size of it.
Isn't it?
Yeah, and a huge aquifer that basically has sort of kept these rare earths in between two impermeable situations. But the real interesting thing about COBRA Resources is 258,000 ounces of gold already jogged. I think there's going to be some sort of deal on that. I think they're either going to JV that or sell the whole thing. And I think if they sell the whole thing, it's worth way more than the market cap is right now. And they're going to have finance to do the rare earth then, almost certainly. And the rare earth could just produce copious amounts of money, literally copious amounts of money. So it's one that we're invested in, happy to say it. As Charles said, that if you're in it to win it, then you have to stay the course to get the full returns, So, but I think COBRA is right at the beginning of its journey, and that could be very, very, very exciting in terms of what it is, and it could also fail. So there you go. But I think it's backed up by the gold. Its current market capitalization, in my view, of somewhere in the region of, let me just get what it is valued up. 7 to 7.5 million market cap. But gold's worth 2 or 3 times that, as far as I'm concerned. So, it's in Australia, it's a gold resource. Why not?
Happy day. I mean, on gold, there's just 2 other companies I want to touch on. The first is Amaroq Minerals, where first gold is going to get poured next quarter. And people have been waiting for this for a few years. So I think there'll be quite a lot of eyes on that relatively soon. Because, I've done the maths on the back of the napkin. And the amount of gold they're planning to process with the gold price at $2,500 US, they'll be looking at making a large fortune every year. But maybe that one's more for 2025. I think the one I wanted to look at over the summer, Artemis Resources, which has kind of gone a little bit under the radar, even though the share price shot up a little bit. They reported from rock chip samples from the Carlo project. There was one sample that returned more than 10,000 grams per ton of gold. There was so much gold.
I know, I saw that. That's basically just that's just a blob of gold.
Gold, well, okay, right. There was so much gold, the lab couldn't accurately report it because it broke the scale.
The machine, he broke the machine.
Yeah, it did. They even bloody...
How many was it? What was it again?
Over 10,000 grams per ton.
10,000 grams per ton.
So they made a 10.4 ounce gold bar from rock chip samples, right? That's currently worth about $24,000. Don't know where that gold bar has gone, by the way, but they definitely made it. And you're kind of sitting there and going, "Look, this is a tiny, this is a small, it's worth 32 million Australian dollars. So it's got other assets on the books as well. So it's not like a tiny thing, but I think it's a company that's kind of gone under, it's not under the radar, but they reported this and people forgot about it. It wouldn't surprise me to see something really exciting coming out of that. But again, on the other hand, it is early scale. It's still rock chip samples.
I mean, if that is at surface, depending on what type of sort of gold geological structure it is, then that could be scary.
Oh, it's. I mean, one of the other drill holes got a 23.8% copper. 23.8. So you're looking at that and just go, I bought shares, for clarity, because I just looked at it and I go, okay, I like early stage stuff. This looks exciting. We should, it's something we should be in.
So it's one of those ICEOGs or whatever they're called.
Yeah. And which is, pretty common in the area where they are. So, they're just going to keep discovering, they're going to keep looking for it. But, one other thing, this trend that they found it persists. It may even go to a Lulu Creek prospect, which recently got a huge government grant for co-funded drilling. So, and how we love grant funding over here. So this is something that I'm keeping an eye on. But again, it is early stage. So when you see, more than 10,000 grams per ton of gold, you go a bit ballistic. But also, you do have to remember, don't throw your entire pension at it.
Yeah, Artemis Resources Limited. Yeah. We did interview a good while ago when they first came to the market, didn't we?
Oh, did you?
Yeah.
It was Alistair Clayton, wasn't it?
Yeah, 12.88 million market cap. I think it came to the market when it very first came to the market. It was about 5 million market cap. They had some disappointments in one of the projects that they were trying to drill, and then they had to raise a hell of a lot of money.
Yeah.
They've obviously found this now, so there's a hell of a lot more shares in issue now than there was previously. There's now 2 billion in issue.
Classic. But it doesn't matter if they've got 10,000.
No, it doesn't matter now. I mean,
yeah, obviously, if you're starting out, then it does. Yeah.
When you look at it, it was 4p or thereabouts when it first listed, and it's now 0.72p, and it has now 10,000 grams per ton rock chip. Yeah,
all the hopes are pinned on it, I think.
As Rick would say, is that worth a speculation?
I reckon so. Well, I think so. I guess we'll find out if I'm wrong or not within the next year or two. If I'm not wrong, then I'll sit on the beach with you, Kev, next time and stop working so much.
Yeah, no, you won't. You're a workaholic. You won't do that at all. So don't lie.
Yeah, that's true. Instead of the background of like a slightly peeled wallpaper, it'll just be solid gold blocks. Right. Anything else?
Well, anything else? I think we've talked long enough. It should be a bit of a marathon session there. But if you like what you've heard, please subscribe, hit the bell icon for any future notifications of any further episodes. Thanks
let's have a good final quarter of 2024, people.
Yes, let's do it.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.